All right, well, it's in a diverse and volatile market where one month your stocks are up, the next they're down, and knowing where to place your investment can be difficult. And to help, we have in studio today financial advisor Jonathan McCoy. Jonathan, thank you for being here. Understanding there's no really safe, or no guarantees, I guess, when we're investing in these type of markets. Are there financial moves that can be almost recession-proof, or maybe put us in the best scenario possible?
Yeah, so as we talk about every week, planning is key, right? Getting ahead of the game, understanding what money are you going to live on during a recession or during a market downturn. And you mentioned the ups and downs this year. A lot more downs than up for most people, unfortunately. So not talking about any specific asset classes, we talk a lot about what doesn't work in a recession. You think back to 2008, the last financial crisis. A lot of the folks that we're talking to over the last 5-10 years were coming out of bankruptcy because of their investments in real estate and things. So some of these things we normally think of as safe and secure, like real estate, don't always work or pan out to the way that you plan. So what we're looking at is, what are these different income producing buckets going to do? When times are good, what's the money you can live off of some of the interest? When times are bad, what's the money that's designed to give you that income stream that will sustain your lifestyle? So those are the strategies we talk about at Market Advisor Group.
I've heard about, let's talk about 401ks again, because this is kind of a dovetail off of something we talked about a couple of weeks ago with estate planning. I've heard about inherited IRAs, and if maybe my spouse were to pass away and leave something to me, what's the difference as a flow down for like that 401k versus an inherited IRA? How are those handled?
So the biggest difference is between when a spouse inherits an IRA or a 401k and a non-spouse beneficiary like your children or someone else. So a spouse is allowed to take lifetime distributions from your IRA if you pass away over the remainder of their lifetime. But if that spouse passes away, the remaining beneficiaries, children are a perfect example, they actually have to distribute those funds within 10 years. So as part of the estate and tax planning that we do for our clients, it's very long term. It's not just what are your taxes going to be this year. How are those taxable accounts like IRAs going to be impacting future generations? The unfortunate part is oftentimes when we pass away later on in retirement, our kids are in the highest earnings years of their lifetime. So leaving that massive taxable bundle of money from an IRA can be a big issue. So what we're looking at is transitioning people's money to a tax-free bucket of assets that can be passed on very efficiently without Uncle Sam having much to say about it. Okay.
Well, Medicare open enrollment kind of is getting underway 15th of next month. Should people be active now in setting that appointment with those advisors so they're ready to go?
Yeah, exactly right. So with Market Medicare Advisors, we work in-house, and sometimes we'll bring a financial advisor into the room with our Medicare advisors to talk about what are the different things going on in people's income situations. But it's important to set those appointments now. Open enrollment is from October 15th to December 7th, so you've got a much wider variety of options for changing your plan. Especially if you're approaching age 65, it's important to know those time frames of when to get in for an appointment. I always say the sooner the better.
Yeah, definitely. Now, normally you have a viewer question here, but today we wanted to talk a little bit about an important designation or differentiation. Is talk a little bit about the difference between just an investment advisor and an investment advisor that is held to the fiduciary standards, because you guys at Market Advisor Group are fiduciaries, correct?
Exactly. So being licensed as a fiduciary is something we had to make a decision on early on in our business to decide how what's going to be the standard of care for our clients, right? And what most people don't realize is a lot of financial advisors are licensed multiple ways. So they can be licensed to sell things as a broker, in other words, being paid a commission for the transaction. So that changes the type of advice you're going to get. If you come in saying, I want to buy this mutual fund or that stock, and that advisor knows they're going to gain the commission, all of their compensation is paid up front. As a fiduciary, essentially our clients are subscribing to our services, and we're here to be good stewards for their money for as long as they trust us to do so.
Excellent. Well, good explanation on that. We appreciate it, and I'm always thankful for your time. I tell you this every time you're here, but I learned something new today. It was about the inherited IRA and 401k flow down, so thank you very much for that.
Happy to do it. Looking to help.
To schedule a complimentary consultation and submit your questions, visit AskOurAdvisor.com or call 816-548-2000. They'll take your questions and even meet with you one-on-one free of charge. If you include your address, Market Advisory will send you a free gift.